Yeah, IJ, you're here. Nice. Okay, we'll kickstart immediately, no wasting time. Just say hi. I just need one hi. Like, hi. Can I get a hi? Okay, that confirms it. Thank you. Double hi. Okay, let's start. We are going to move very fast as long as you have that open tuition open. Yesterday we stopped here where we calculated the total assets. The question we are looking at is on page 12 of open tuition. We have solved up to the total assets. So what is left? They said we should this is a published account question, statement of financial position and statement of profit and loss. Very good. So I'm going to clean this off. You have this already. And we continue. Now what do we have here? We have, let me do it here. Equity and liabilities. Continuation from the question yesterday. We have done this. This is the format of the statement of financial position. So after total asset, we have assets, non-current assets, we have PPE, we have other things like tangible and intangible, all those goodwill, but they are not in the question, so they are not going in the current assets. We have our total assets. Then we now go to equity and liabilities, because your equity is equals to what? Asset less liabilities. Equity is the the residual amount after you have deducted your liabilities from your total asset. So now we go to equity and liabilities. So for equity, these are the shares, and from the question it says that the shares are what? $1. So look at the question. The first on the list is equity share capital, which is on the credit side, 5,000. So we come here and we put 5,000. After that, on our trial balance, we tick it to show that yes, we have attended to it. So what other things do we have here that will go into equity? From your format, which you should have known now in your head, we have retained earnings. Earnings. What are retained earnings? In terms of the format, retained earnings is all the amount of profit which you have been making all this while, including what would be there after you have finished doing your statement of profit and loss. Now, that wasn't too clear, but I'll explain that. Now, we are doing our statement of financial position, and we are also doing our statement of profit and loss on other comprehensive income. After we get the statement of profit and loss, which is from 1st of January 2017 to 31st of December 2017, whatever figure it is, we will take it and add it to the retained earning we had as at 1st of January 2017. What do I mean? If we have 1st of January 2017 and the answer is 5, we will take what we would calculate now. Remember I said the statement of profit and loss is like a video of all the processes from beginning of the year to the end of the year, while the statement of financial position is a snapshot at the end of the year. Then we will now take the duration to 31st December 2017. If this is 10, we add 10, and that will be 15, and that will go in here. That's the mindset when you look at the retained earnings. So let's go. Now we are going to look at this. Retained earnings at 1st of January 2017. What is it? That's the second on the list in terms of the trial balance. On the credit side, that is 5,835 plus. We cannot put this in here. We can't put this in here because we have not done the statement of profit and loss and other comprehensive income. That is normally why before you do the statement of financial position, in a question like this, you should do the statement of profit and loss and other comprehensive income. But we did not do it. Sorry about that. Let's try and fill up the other spaces, then we'll get back to this. You have this copied out already. So next, what do we have again? We are looking at the things which we have not ticked. So we have total equity, I've not calculated this yet. So now let's go. The next one will go to its non-current liabilities. Non-current liabilities. Another non-current liabilities, let us look at the trial balance. Equity, done. Retained earnings, done. We have put the figures in. Revenue, that belongs to the statement of profit and loss. Staff cost. Okay, we'll leave that one. Staff cost. Say staff cost 5,400. We'll come down there, we'll see. Staff cost, that should go to profit and loss. Inventory at 1st of January 2017, 3,009. We'll attend to that later. Purchases, that's not for the SFP. Distribution cost, that's for the SPL. Administration expenses, that goes to the SPL, profit and loss. Loan interest. Loan interest, that goes to profit and loss. Investment income, that goes to profit and loss. Tax, profit and loss. Receivables and payables. We have done for receivables, we have not done for payables. So don't tick the payables yet. Bank, we have ticked bank. Motor vehicle cost, we have done it. Building cost, we have done it. Motor vehicle accumulated depreciation, we have done it. Buildings accumulated depreciation, we have done it. And we have debenture 2020. Listen, non-current liabilities are liabilities that are more than a year. Current liabilities are liabilities that are within a year and a year. So if you have liabilities that are within a year, that is a current liability. If it's more than a year, that is a non-current liability. Example we have is debenture. It shows that it's going to be paid, redeemed back or paid back by 2020. So what is it? A debenture is a non-current liability. So we take it and we put it here. Debenture. 1,000. So you see, these are your ability to identify transactions which has happened and classify them, identify, recognize them, and recognize them at their whether historical cost or fair value cost or net realizable value cost. These are the essence of the standards that we have in place. For the standards for property, for generally, we have the standard IAS 16, which is very popular for property, plant and equipment. We have IAS 23, which is for borrowing cost. We have IAS 20, which is government grants. And we have also IAS 40, which is investment income, which is like investment properties also. So we are done with the debenture. Now, I can't see anything else again, so we go to see if we can see any payables there, any current liabilities there. So the next is current liabilities. Current liabilities. What do we have? We have payables. Now let's go back to payables. After tax is payables, and payables is on the credit side. That is 2,360. We put here payables 2,360. Good. We now look again. Now let's look at the notes and see whether we are missing anything in the notes. Note 3 says staff costs are to be apportioned equally across cost of sales, distribution cost, and administration expense. Those goes to the SPL, statement of profit and loss. Then let's look at note 4. Remember, we have done note 1 and 2. When you are working on this question, this is a published account question. When you are working on this question, you are working with what you are seeing in the question and you are working with the notes. So you have to read them almost jointly. Note 4 says the balance of tax on the tax account represents the over. Come here. Represents the over or under provision for the prior year. An estimate of 1,500 has been made for the tax payable at the year end. They have given us tax payable. There's also a standard for tax. We will look at that where we will look at deferred tax also. 1,500. We are on our way. So, how much is this? With the calculators out, I hope you're calculating with your calculator. 1,000 plus 2,360 plus 1,500. I have 4,860. So total of equity and liabilities. Now listen, if I am in the exam hall I want to go and do my things sharp sharp. I have here total assets, this, and I have this one. Total liabilities is this. I don't have a figure yet here. Do you know what I will do? Addition of this figure and this figure is supposed to be the same as this. So this is just what I will do. I will just do $28,735 minus 4,860. This is just for your sharp tricks. These are tricks for you to. Then minus 5,000. No, wait. 28,735 minus 4,860. That will give me 23,875. Tell me you understand. Remember, the normal day we are supposed to do the profit and loss first, so that we will get the figure that will be here. But for now, we have done the statement of financial position first. So I want to use a trick which you can also use in the exam. Number of the amount of the total assets should be equal to the amount of the total equity and total liabilities. You don't understand? Okay, let's leave this one. Let's do it the way we are supposed to do it. But have you written this thing? Have you copied everything here? Please tell me you have copied everything here. Have you copied everything? Yes, you have copied everything. So I'm going to do the statement of profit and loss here. So by the time when we are done with it, I can put the figure here and we can just complete it. So SPL for the year 31st December 2017. What do we have? Revenue. In the question, what do we have for revenue? Look at it. Line 3 on the credit side, revenue, that is 66,980. And cost of sales, so for cost of sales we have to do some workings. Okay. Now, can you see staff cost? Go to 3. Note 3. Note 3 says staff costs are to be apportioned equally across cost of sales, distribution costs, and administrative expense. So we have cost of sales, distribution cost, we have admin cost. This is staff cost. And what is staff cost? Staff cost is number 4. 1, 2, 3, 4. It is 5,400. 5,400. And the question says in note 3, staff costs are to be apportioned equally across all of this. So if it's apportioned equally, it means this will be divided by 3. 5,400 divided by 3, what does it give you? This is $1,800. $1,800. $1,800. So take note. So we'll come here and we'll put 1,800 plus. That's staff cost. Now let us visit the other things which we have not ticked off in the trial balance. Equity ticked off, retained earnings ticked off, revenue ticked off, staff cost we just did, cost of sales. Now inventory. It says inventory at 1st of January is 1st of January 2017 is 3,930. Now, what did we have as inventory at the closing that we put in the statement of financial position? I want you to type it. Remember we said when we did the inventory is the lower of cost and net realizable value. Look at your notes. What was the value of inventory as at 31st of December 2017 that we calculated? Because what we are trying to do is we have I need you to write that figure for me. The inventory that was in the statement of financial position. I need you to write it for me and explain to me, if you can, what you think we're doing here. Hello? Hello? Okay, in order not to waste time, this is the inventory as at 1st of January 2017. Then this is less the inventory we have in the inventory as at 31st December 2017. This was in the SFP. Please tell me you understand what happened here. Inventory as at the beginning of the year, less inventory at the end of the year. IJ, do you understand? I cannot move forward if you do not understand. Yes. No, I don't get that. Where did you get 1,800 from? What was that? Or was this yesterday's class? Let's see. 4,000 at closing. Thank you very much. So that is it there. Remember this, we have not 1,800, 1,800. I don't have enough space, so I have to do this. Okay, going down, what do we have again? Purchases. After inventory, we have purchases. That's part of cost of sales. Remember when you are selling goods, your cost of sales is what you bought it at. So purchases is 38,760. So plus 38,760. And you tick it. So what's the next thing we see? Okay. Okay. Thank you. Thank you very much. Thank you. So now we have some last things that have to enter here. Can you remember the depreciation for the car and depreciation for the building? They go into cost of sales. Depreciation for car and depreciation for the building. Depreciation for car and depreciation for building. What was it? Depreciation for car and depreciation for building. What is it? Okay, good. And for building. This is how I know you're following me. Depreciation for building. Thank you very much. So give me the total cost. 1,800 plus 3,930 minus 4,000. This is the movement of inventory. So okay, I think while you're calculating, give me the figure we are working together today. What's the figure? What's the figure? What's the figure? Are you sure? I don't think so. If you calculate it very well, it is 41,770. Calculate it again, it's 41,770. Okay, when we do this, we have 25 to 10. This is the gross profit. Gross profit. So we move to distribution cost. Okay, distribution cost. Remember our 1,800 that we did then? Yes, you add the depreciation. The reason you add the depreciation is what? It's an expense. Expense is a debit. Cost of sales. Depreciation goes in there. It's a debit. You understand? Staff cost is an expense. It's a debit. Purchases is an expense. It's a debit. Opening inventory, closing inventory. Do you understand? Do you understand? Okay, thank you. So distribution cost, we had 1,800 earlier before. Now let us go through the list to see if there's another cost. If you see there, you see another distribution cost. 1, 2, 3, 4, 5, 6, 7. 7 from up on your trial balance. Distribution cost of 3,130. And this will be 4,930. Admin costs. Admin costs, we have 1,800 plus, let's go to our trial balance to see whether there are other additional expenses. Yes, we have on number 8 admin costs of 3,790, and we have 5,590. We add it up and this will give us 14,690. And what is that? Operating profit. So what do we have left on our list? Let's look at it. Equity shares done, retained earnings done. But remember, we have to fill it up. Staff costs done, inventory done, purchases done, distribution costs done, admin expenses done, loan interest. We have not done that. Loan interest. What's a loan interest? You get a loan. When you get a loan, there is an interest on it which you pay. Apart, what are the two components of a loan? Two components are that you borrow the loan, you are paying interest on it, which is one part. The second part is that at a stipulated time, you will pay the principal. So for the interest, it is being expensed to the statement of profit and loss. So, and it is a finance cost. So we say for the loan interest, finance cost of 200. So we tick that part. What else do we have after loan interest? Investment income. What is an income? If you credit an income, you are increasing it. You debit an income, you are reducing it. So this is investment income. From the trial balance, you see investment income is 250, which is this. What other thing do we have there? After investment income, we have tax. Okay. Since we have tax, we can put it here first. Add it up, this is 14,740, and this is the profit before tax. Before tax. Then we put income tax expense. From your trial balance, what do we have? We have tax of 200. At the end of the year, we have tax payable. Look at your note 4. It says the balance of tax on the tax account represents the over/under provision for the prior year. An estimate of 1,500 naira has been made for the tax payable at the year end. So 1,500. So the profit for the year is 13,040. This 13,040 is what is supposed to go in here. 13,040 will find its way into this place. 13,040. So it's always advisable to do the statement of profit and loss first before you do the statement of financial position. 5,835 plus 13,040. This will give me 18,800. 875. Please tell me you understand. But even after you tell me you understand, you still have to practice. Aida, do you understand? Do you understand? Look at it very well and tell me if you understand. Thank you for understanding. But do you know what? To prove to me that you understand, you will solve this question in your own time without looking at, without looking at the answer at least 2 consecutive times. 2 times. And just to make you happy a bit, this is an exam standard question which you can see. This is an exam standard question which you can see. So I can clean the board now, right? Okay, I'm cleaning the board. Yeah, that's an exam standard question, which we just did. So I just wanted to get a feel of it. Now I want you to look at page 13. On page 13, that is the statement of changes in equity format. You have to know that. One good thing is under equity, in the statement of financial position, you have your shares, share premium, retained earnings, and you might see revaluation surplus. So what happens in this format is you have it like this, you invert it like this under the statement of changes in equity. So you have things like the shares, you have the retained earnings, you have the revaluation surplus. So something like this. Statement of changes in equity. So you have the shares. Don't just say shares, because there can be preferred shares. This is equity shares. Retained earnings, revaluation surplus, total. Get this format in your head. Then we could have brought forward as previously stated. Change in policy / error. Brought forward restated. Issue of share capital. Dividends. Okay. Okay, we know what equity shares mean. The highest form of risk in investment in terms of share. But if you want to rank debentures, preference shares, or so, this is your equity shares. You know what retained earnings mean? When you have your statement of profit and loss, when you are done, you take the profit for the year and you add it up to the retained earnings, which is reflected in the statement of financial position. So it's like where you dump your profits. What is the valuation surplus? Now, from valuation surplus, it's more like if under IAS 16, if we have a house, just tell me you are listening to me. Just say yes, you are listening to me. Because I want to explain this and I want to be sure that you are listening. I can only see you type. I can't see your face. Please tell me you're listening. Please tell me you're listening. I'm a bit uncomfortable now, not since you've not said yes, you're listening. IJ, are you listening? Come in, IJ. IJ, come in. Okay, she said yes. Did you say yes or it's just me? Why can't I type? Did you say yes? Are you listening? Are you listening? Madam IJ, I'm waiting for you to tell me you are listening. Hello? 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 Yes, I got a yes. Thank you. Now, evaluation surplus. When you have a building you bought 5 years ago for like $100 million, and you come to this year and you now revalue the building and you measure it at the market price, you measure it at the fair value, and it is $120 million. The excess of it, the excess will be transferred to the revaluation surplus. What is the revaluation surplus? The valuation surplus is it's in the equity. That is where you transfer the excess of between revalued amount and historical cost amount. One of the primary aims is till when you intend to sell it or till when you dispose of it, then at that point in time it can be realized and it will now be taken from the valuation surplus to the profit and loss statement of profit and loss statement. Okay, thank you. Statement of profit and loss statement. So in explaining this is a basic format. Don't bother too much about this board forward, it's just the format. So when you have all of this, issue of share capital can only go into equity shares. That is this. Dividends are paid out of what? Retained earnings. Clearly, total comprehensive income. We will visit that as we go. We'll visit that as we go. the total comprehensive income is a combination of voila. Transfer to retained earnings. If at when we valued our building from 100 million to 120 million, and we transferred 20 million in here, by the time we want to sell it, in terms of transfer to retained earnings, we will put negative 20 million here to cancel out this and transfer it to the retained earnings. That's just having an idea of the statement of changes in equity. On this note, let us just quickly look at example 2 in question on page 13. Example 2, page 13. Statement of changes in equity. It said, which of the following should appear in a company statement of changes in equity? Number 1, total comprehensive income for the year. Amortization is almost like depreciation. When you are depreciating intangible things, that is amortization. Amortization of capitalized development costs. Surplus on evaluation of non-current assets. What is your answer, IJ? Example 2, page 13. What is your answer? A, B, C, D. You can only choose one. A, B, C, D. You can only choose one. What is your answer? I'm waiting. What is your answer? Example 2. Hello? Can you hear me? Example 2 on page 13. What is your answer? Which of the following should appear in the company statement of changes in equity? 1, total comprehensive income for the year. 2, amortization of capitalized development costs. And I said amortization is the form of depreciation on intangible things like development costs and such. Surplus on the valuation of non-current assets. What's your answer? What's your answer? You're the one writing the exam, I'm the one teaching. I need you to go have a try at it. Have a try at it. Have a try at it. Thank you! You got it. We are getting somewhere. Now on that line, let's try example 3, page 14. Extracts from Ball's nominal ledger for the year ended 31st December 2017 are as follows. Profit for the year, 421. Dividend, 98. You can see the question. Now it says, prepare the statement of changes in equity for the year ended 31st December 2017. I want you to give it a try, IJ. So during the year, the following important events took place. Properties were revalued by $105,000 increase. 200,000 equity shares of $1 were issued during the year at a 25-cent premium. The opening equity balances were as follows. So, madam, I need you to do something. Take note. Oh. Number 2 says 200 equity shares of $100 were issued during the year. Note while you are solving, share premium can enter here. Equity, share premium, retained earnings. So give it a try. While I give my own a try also. I hope you're not looking at my answer. Try it out first before you look at it. Aja, are you done? Okay, anywhere you are, let's look up now. Let's look up. Can I continue? All the eyes say aye. Can I continue, please? Hello, IJ. Hello, 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 hello. Thank you. So looking at that question, is simply using the format, and it will help us easily put in square pegs in square hole. Just take this. This is what you see in your normal statement of profit and statement of financial position under equity. You normally see equity shares, share premium, retained earnings. You might not see revaluation surplus there. Yes. Revaluation surplus. Now, both forward balances are these which are listed in the questions. Profit for the year 421, which is there, goes to retained earnings. Dividend is a negative under retained earnings. Then the easy question, property revaluation goes to revaluation surplus, like I told you, an upward increase. Then for the shares, which was the tricky part of the question, they said 200 equity shares of $1 were issued during the year at a 25-cent premium, meaning that issue of shares 200. Then I told you the last question, there was one question we solved when you called me the other day. When they say during the year at a 25-cent premium, the premium goes to the share premium. So 25 cents, you say 200 divided by 25 cents, and that will give you the amount that will go into the share premium account. And that is, did I say divided? 200 times this is it. Times 0.25. So that is it. So after this, I'm cleaning up this. We will take a 10 minutes break and we will go into PP and other things. I need to be done with PP and borrowing costs today. So we'll take a 10 minutes break. We'll be back at 1:25 and we'll finish the class at that point in time. 1 minute break. 10 minutes break, please. But my video will still be running. Okay, good day, I'm back. I am back. Please confirm to me, IJ, that you are there. IJ, confirm that you are there. IJ, confirm you are back. Confirm you are back. IJ, confirm you are back. IJ, confirm you are back. IJ, please confirm you are back. IJ, please confirm you are back. IJ, 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 confirm you are back. Please confirm you are back, IJ. Okay. Yeah, we're back. Okay. We have tangible non-current assets, and I'm sure you would know where that would feature in the statement of financial position. We have non-current assets. We have things for tangibles. These are the 4 things you see there. Property, plant and equipment, borrowing cost, government grant, investment property, and we have intangible non-current asset, which is IAS 38. Now let's look at PPE. We have played the PPE a lot. We have tossed with it. We have used it in the exam type question that we solved. Now go with me to page 21, so I don't have to write much on the board. On page 21, you will see what we actually have on the board here in terms of the categorization of the non-current assets into IAS 16, which is property, plant and equipment, IAS 23, which is borrowing cost, IAS 20, which is government grants, and IAS 40, which is investment property. Now we are going to look at how to recognize these categories of transactions and where they fall into. How some of them would be depreciated and expensed into the profit and loss statement, and some of them, the carrying value, would be represented in statement of financial position. Now we look at IAS 16, measurement at recognition. It is normally being measured at cost, which is the purchase price, and the directly attributable cost. For example, you have a big plant machine, a gas turbine which you bought from, let's say, from UK, and it has to be shipped down here. So if you recognize it at cost, at the purchase price, and the cost it takes to transport it to your site. And the third one is you also recognize the cost to dismantle and to restore it, basically. Now, there is another way of recognizing it also. There's a cost model, there's a evaluation model. We talked about a building which falls under IAS 16, that you had $100 million and you now revalued it to $120 million. How do you do this treatment? For the cost which we have in here, it is carried at cost less accumulated depreciation and impairment. 3 things. It is carried for the cost model, it is carried at cost, less, which is minus accumulated depreciation from inception of when you bought it up till now, which could be 5 years or any, and impairment loss. What is impairment loss? Remember the first example we used at the beginning of this series of lectures, where we said you bought a fridge and the fridge is 20 naira, only for you to get home and you now find out that the compressor is spoiled. Now the cost of that fridge is 15 naira. Means an impairment loss should be recorded for 5 naira. What does that mean? When the carrying amount in the statement of financial position of 20 naira is greater than the value which can be realized from it, then you now know that there's an impairment loss. In another state, they will say when the fair value is greater than the value used. So your fridge is 20 because of the compressor, which is bad. It now becomes 15, you have an impairment loss of 5. So recognition of IAS 16 property, plant and equipment is the cost price plus any attributable cost of bringing it to site, attributable cost of bringing it to the location, and the dismantling and restoring of the site to its original position, less accumulated depreciation and less impairment. That's for the cost. Now for the revaluation model, the valuation model is the fair value less accumulated depreciation less the impairment. So that is basically how it is. Now for the revaluation model, it says if the asset is carried under the valuation model, the following must be applied: review periodically and keep revaluations up to date, consistent policy for each class of assets, avoid cherry picking of assets, picking the one you think you want to evaluate. You have to evaluate the whole thing. Depreciate the revalued asset less residual value over its remaining useful life. To further buttress what I have been saying, in IAS 16, two models Carmen, 1 minute, my tab is not behaving. Basically two models. We have the cost model evaluation model. We are talking about measurement at recognition. IAS 16 PP. So we said this is carrying that cost less accumulated depreciation less impairment losses. Then we said carry that the valued amount which is fair value less accumulated depreciation and impairment losses. The battery is 1%. Wow. Okay, we are basically finished with IAS 16. Since your battery is 1%, this is what you do. You are going to solve example 1, solve example 1, 2, and 3, and 4. Example 1 to 4, and send it to me before Wednesday. Example 1 to 4, send it to me before Wednesday. No one, I understand. Just solve example 1 to 4 with what we have done on PP. We should round it up. We have to finish PP. Send me your answers before Wednesday. Solve it before looking at the back, and we'll talk within the week. Under IAS 16, there are examples there in that note. The examples are on page 22, page 23. You see example 1 to 4. Solve them. Please tell me that you okay. You should go on. So we have round up the class at this note. Thank you very much, and God bless.